Looking to take your leverage game to the next level, or maybe you just want to start trying something new this year? Well, whatever your goal, in this video, we're going to give you some of the answers you need so you can pick the right products and start moving forward right now. We're going to be answering the question, futures or options? What should I trade? Now, that answer is going to be different for different people, but we're going to walk through exactly what you need to know, the risks, the amount of leverage, the downsides, taxes, and then your bottom line. At the end, hopefully, you're going to have a really good frame of mind to attack futures or options or both, or maybe even a different product for just a different purpose that you use in your own trading arsenal. I know personally myself, I actually use both. And I can talk about that towards the end of the video. So if you want to see or hear when I'll trade futures versus options, I'll explain a little bit of that. Now, both futures and options are derivatives that allow for speculation. And that speculation is really essentially about an asset price, but you don't have to necessarily own the asset. So you can speculate on the price, but without actually owning it. And hence why both are great for traders and not necessarily investors. It's more those who are looking to speculate on price and price movements and build some sort of strategy around taking advantage of opportunities that they see in the markets. Now, both offer contracts and have expirations that you will need to be aware of, so they are similar on that front. Now, before we dive into the dirty details of this video, I do want to shout out the sponsor of today's video, Jigsaw Trading. Jigsaw Trading offers traders an edge in the markets through powerful and intuitive trading software. With advanced tools for order flow analysis, visualization, execution, and advanced analytics and trade journaling, Jigsaw Trading gives traders a real-time view of market activity and helps them make better informed trading decisions. Whether you're a beginner or an experienced trader, Jigsaw Trading has something to offer, from their starter package to their professional package. Plus, their team of expert traders is always available to provide guidance and support. Take your trading to the next level with Jigsaw Trading. 14-day money-back guarantee. Try it today. Thanks for Jigsaw for sponsoring today's video. Okay, awesome. So let's talk about leverage. Now, both futures and options do offer substantial leverage. And when you look at them side by side, you can really size into a futures contract or multiple futures contracts and multiple option contracts with almost unlimited leverage. Like, you can continue to add, and just build the position up larger and larger as your account or portfolio would allow you to do so. And then it comes down to what you're comfortable with at the end of the day. But we talk about leverage, you're going to get more leverage compared to buying a stock or buying like the S&P or buying crude oil or something like that. You're going to have a lot more money on the line for a price movement up or down potentially, versus if you were just to own the underlying asset that you were trading futures contracts or option contracts around. Now, until recently, options were by far and away the much lower barrier to entry way to get extra leverage. And what we mean by that is you could go into the option market, you can go to the option chain, and you could find option contracts that are worth a couple of cents. And what that essentially means is it's a couple of dollars out of your account to buy it. Because when you buy an option contract, the price that the option contract shows on the option chain, let's say it says 5 cents, you multiply that number by 100 because you're buying the right to buy or sell 100 shares at a given strike price. That's what you're doing when you're buying an option contract. And we've got plenty more videos on the channel explaining options if you are still confused under our options playlist. But you could essentially get started for a couple of bucks. You don't need to have thousands of dollars. You don't need to be using margin or meet the margin requirements of certain brokers or meet certain requirements that many futures brokers offer. And many will have you starting out with, a couple $1,000s in your account just to get access. And there are restrictions there. But for a long time, it was like, oh, options. That's where I'm going to have, the lowest barrier to entry. If I'm just getting started as someone who only has a couple $100s or a couple $1,000s, and I want to start, getting my feet wet, I'm going to go to the option chain and find some cheap options and see if I can make some money. And yeah, that was great. But now with the addition of micro futures contracts, for example, the micro E-mini S&P 500 futures that you can trade these days, there are some brokers out there that will allow you to trade these contracts with as little as like $50 to $100, which is pretty cool because, years in the past, Futures were almost seen as, oh, that's for professionals, that's for those on the floor, those are for people who have big money, who are serious. And now the average retail trader like you and I can trade futures, and the barrier to entry isn't insane, and the risk isn't as insane when you're playing, for example, one contract or micro contracts. And so from that perspective, the gap has definitely closed in terms of the barrier to entry. Still, you can get started on options for cheaper, but it's not as big of a gap as it used to be in terms of getting access to trading futures these days. So I mentioned before, options give you the right to buy or sell 100 shares at a given strike price at a set date in the future. Futures also give you the ability to buy or sell an underlying asset, for example, let's say crude oil or the S&P 500, at a predetermined price in the future. There's also expiration dates to those contracts that you do trade when it comes to future. But you can see how it's more so catered to traders who will trade these assets rather than an investor, because if you're investing, you'd much rather just go buy the asset, buy the physical asset, go buy the S&P, go buy something that you can hold on to and not have to worry about expiration dates and time horizons if you believe that that's a position or an asset that you want to hold and invest in over time. And that's where like the difference in mindset can kind of come into play when it comes to trading futures and options. And you'll see that many investors will never touch these things, and for good reason. Now, when it comes to futures, I want to talk a little bit more about the pricing and how this leverage kind of works. So for example, we talked about the micro E-mini futures contracts, and the S&P 500 micro E-mini futures have a $5 multiplier, where the E-mini, not the micro, the regular E-minis have a $50 multiplier. So for every 1 point move in the underlying S&P, you're going to get either a 5 on the micro or a $50 move in your P&L if you were to own one contract on the micro or the E-mini futures contract. So it's something to take into account. If you had one contract of the micro E-minis and you get a 10-point move on the S&P, great. You might have a $50 gain. Awesome. But you can see how that's, for someone who's just getting their feet wet starting out, fair. But you can, of course, have multiple contracts at play, which could drastically increase or decrease your P&L swings. And if you were to go with the regular E-mini futures, $50 for a 1 point move. So do the math, $500 if you get a 10-point move on just one contract. And that can, of course, scale with more contracts and other futures products out there. So hopefully that kind of makes some sense. Now, with options, you have the ability to trade in the money versus out of the money options. And when you're trading a contract that is out of the money, your upside can be potentially incredible and very, very lucrative. Whereas if you're trading in the money, your upside can still be nice, but not as incredible as an out of the money. But of course, there's many other pricing factors at play, and that's what I want to dive into next. Futures are like fairly and very straightforward. When the price goes, if I buy at this price and the price goes up today from where I bought, I'm going to be up on my position. Same as down or vice versa on down. With options, that's where things get a bit more confusing, and that's where people can lose a lot of money. We've all probably been there if we've traded options. I know I have been there myself. There's things like time decay. There's things like the Greeks. There's a lot more that you have to pay attention to. There's intrinsic value versus extrinsic value that you'll need to have a good grasp and understanding of. And so it's possible that the price of an underlying stock that maybe you want to buy options for, let's say SPY, the S&P, and SPY goes up a little bit from where you bought, but your option contract actually goes down. Well, there's things like we said before, like time decay, volatility decay. Like there's a lot of factors that go into these option contracts. And so it's not as straightforward of a pricing system or a pricing model. And it might not make a lot of sense to someone who is like, well, if the thing goes up, I should make money if I bet on the long side or if I bought a call, and vice versa if I bought puts. It's not that easy. And that's where people need to be very, very careful when they get into options, because you can lose a lot of money if you don't know how the pricing works. Good thing is that we've got plenty of videos on options and option Greeks and all that stuff in our option playlist if you guys want to check that out for free here on the channel playlist tab. But with that said, the option risk rewards can be very, very nice because you have a capped risk. When you talk about a futures contract, you have to go in there and get out if you're wrong at your stop loss, or go in and market sell or limit sell or out or buy out if you're in short. When you're in an option contract, it's possible that the option contract may just expire worthless and you could buy it and do nothing. But when you buy an option contract, your max risk is what you paid for. Now, there's other option strategies out there. You could look into selling, there's spreads, there's all these other different option strategies that we also cover on the channel that you can take advantage of when it comes to options. But simply put, if you're just trading, I want to go long or short here and bet on the up or down on a stock or whatever, your risk can be capped at what you bought the option for, and the upside, technically speaking, can be unlimited. So you can talk about risking 100% of your, position size for making 1,000%. Like those things can happen, and they do happen pretty much every single week. And not every stock, but across the market in many different stocks, there's always crazy moves like that occurring in the option market. Building off that, I want to talk about a little bit of my own strategy here. When it comes to options and futures, like I mentioned earlier, I would talk about, what I do. I like to trade futures when I'm trading the S&P or the NASDAQ instead of options, because it's a simple, streamlined approach. If it goes up for my entry price, I'll make money if I bought along. And if it goes down and I'm shorting, I will make money. Simple as that, right? Where I get to options, I like, if I want to trade individual stocks and I see a setup that fits my criteria on a given day, I will trade an individual stock. It's mostly going to be your large cap tech stocks. That's generally what I find the contracts to have, the tightest spreads and tons of volume, no problems getting in and out. The thing is, you also have the ability to play off of relative strength and weakness. You can still do that in futures, but not to the degree that I have found you can do it in the option market when you're just pinning, 6 stocks against each other. Which one's the strongest? What's the weakest? Okay, here are the top 3. If the market's up today or the market's strong, we're in an uptrend, I'm going to take these top 3 stocks. They are the strongest ones, and I'm going to focus on those if I'm looking to trade long, and vice versa on the downside. And what you'll tend to find, not all the time, is that there'll be 1 or 2 that has more of an outlier move on a given day. And so you'll get a bigger bang for your buck in terms of that move because there's more strength there on that given day, week, or month. And that's why I like trading options. So when we get into the next part, taxes, there's something called the 60-40 rule. So if you're familiar with taxes when it comes to, taxes on your investment portfolios and trading profits and whatnot, you'll have to understand that there is long-term and short-term capital gains. Short-term capital gains is, okay, what's my tax bracket? Like, what's my income? Sum it all up. Where do I fall? And that's something that's short-term capital gain. Like, you will fall into your tax bracket. So if you have short-term capital gains, meaning you bought and sold and day traded all year, you made $10,000. Wherever you fall when it comes to your tax bracket, you'll be taxed accordingly. If you have long-term capital gains, let's say you bought an asset on July 1st, 2021, and you sold it on July 8th, 2023, you held it for like 2 years, right? Because you held it over a year, it'd be classified as a long-term capital gains, and the long-term capital gains tax brackets are generally going to be lower than your short-term capital gains tax brackets. So especially if you're making higher incomes, okay, there's tax incentives to hold things for longer and not day trade. But of course, not everybody cares. And if you're a day trader, you don't really need to worry too much about that because I'm going to trade when I see opportunity and I'll be taxed accordingly. That's kind of how I view it. If I see opportunity, I'm going to take the opportunity. And if I'm getting taxed, hey, that means I made money. That means I'm doing something right. And then on the back end, I can look to other tax strategies, maybe outside of trading and whatnot, that could potentially lower my tax bill later on, right? So there's opportunities elsewhere. Now, the 60-40 rule when it comes to futures is where the money is at. 60% of net gains on futures trades are going to be treated as long-term capital gains and 40% short-term capital gains. So you can see that you're getting some better tax treatment by playing futures versus playing options if you are only a short-term trader, day trader, selling positions less than a year, right? Buying and selling less than a year. Now, we've got an entire video covering futures taxes if you want to dive deeper. That video is actually a recent video that we made on the channel. Highly would recommend checking that video out. It's also on our futures playlist if you want to dive a little bit deeper into the futures taxes and then talk about wash sale rules and all that stuff. But there is some more incentive there. But when it comes down to at least my perspective, I'm not going to trade only one product because I have opportunities that can present themselves to me based off of my strategy, both on options in the option market and the futures market. And if I were to only focus in one space, I would be potentially limiting some of those opportunities, hence why I will do both and not really worry too much about the tax repercussions and the tax treatment, although there are more incentives if you were to only trade futures. So there you guys go. I know I'm a perfect example of someone who does both, but I'd be happy to hear your thoughts on this in the comment section down below and let us know which side you are on, or are you on both sides at the same time? Thanks so much for watching. Check out the sponsor of today's video, Jigsaw Trading. Link in the description box down below. Make sure you are subscribed, and we'll see you in the next one. Peace.